Good afternoon, everybody, and welcome to another episode of the Tip Share. Today, we are going to be talking about how to accurately calculate liquor cost in your restaurant or bar. Understanding your restaurant's COGS, the cost of goods or cost of sales to some, it's the key to success for every well-run restaurant. And as every operator knows, industry margins are paper thin. So to become profitable, it's imperative that you gain a true handle on how to control COGS in your restaurant. We have another webinar and podcast as well as a blog post on how to control COGS in your restaurant. So make sure that you check out our resource center at rasiusa.com and you can check out how to control COGS in your restaurant. So today specifically, as I mentioned before, we are going to be focusing on liquor costs, and we're going to be looking at three things. 1, how to accurately calculate your liquor cost. 2, why it's important to know your pour cost or liquor cost. And 3, how to properly manage your liquor costs. So first things first, let's go ahead and look at your pour cost formula. So your pour cost or your COGS, your cost of goods, are going to equal your beginning inventory, which is what you had on the shelf at the beginning of the week, plus your purchases, what product you've purchased that week, minus your ending inventory, so the product that you still have on your shelf at the end of the week. You're going to divide all of that by your sales, which is the dollar amount that you've sold throughout the week, and that is going to equal your product usage. So let's take this formula and let's go ahead and put it in an example. Let's say you've got these numerical values. You've got your beginning inventory of 1,906. You've got your purchases, 6,398. Your ending inventory, 2,425. And then your liquor sales of 23 grand. In our formula, that's going to be 1906 plus 6398 minus your 2425. So, right, that's your beginning inventory plus your purchases minus your ending inventory, and we're going to divide that by your liquor sales, which was 23 grand. So then you've got your pour cost. So that's 5,879 or 25.56%. So why is this so important? Why do you need to know your restaurant liquor costs? If we use the example that we just spoke about, we know that for every dollar in sales, roughly 25 cents is used to pay for the liquor. This leaves you with 75 cents of gross margin. So let's put that in perspective. It takes far less to earn the 75 cents on each liquor item sold than it does to earn 65 to 75 cents for each food menu item sold. This means the labor needed to make and deliver each drink is significantly less than each menu item. Rather than focusing on discounting booze for happy hour, focus on creating a value-driven happy hour food menu, right? Liquor sales contribute to an organization's net profit far more than food sales. All right, so let's talk about how to properly manage liquor in restaurants. First, we're going to discuss theft prevention behind the bar. And secondly, we're going to talk about proper liquor purchasing strategy. All right, so diving into behind the bar theft prevention. First thing we're going to discuss is your weekly bar inventory. Performing weekly bar inventory enables you to readily see the variance between your inventory levels. Additionally, it enables you to view the relationship between your purchasing dollars against your sales revenue. Next up, we've got consistency in counting. It is a best practice to always have 2 people count and record in the same way, so a consistent manner every single week. This will provide you the accuracy you need to spot anomalies in your bottle usage and your stock value. This next one is a big one. We've got repair and maintenance issues. If you count weekly, this is going to help keep you aware of your surrounding facilities and equipment. This is the best way to set yourself up for proactive preventative maintenance concern. So lastly, we've got our breakage book and our comp tabs. So your breakage book, which is also known as your bottle book, this is a tool that allows you to readily check your usage against your sales, which shows you if a team member has a penchant to give away a specific type of alcohol. It also helps control waste or spill. For an added benefit, it's always recommended to provide your bartenders with a comp tab. Comp tabs enable your bartenders to build your business while you maintain control of how much product is being given away or promoted to do so. All right, lastly, let's chat about this proper liquor purchasing strategy. Using your COGS to influence your purchasing strategy is a great way of turning data insights into tangible cost savings. Track your restaurant sales and spend on a weekly basis in a weekly purchase journal. This will help zero in on low or slow selling items and make spending cuts accordingly. Also, using a declining budget based on forecasted sales each week allows you to keep inventory levels lower. This helps you to more easily track variances in your inventory and keep cash in the bank. As an added bonus, having an inventory system will ensure that your stock value, the total sum of your inventory value, is accurate against your purchases for that week. Thank you so much for joining us today. And don't forget to check out our website at rasiusa.com.